So obviously, to those in the crowd, thank you for joining, no matter what part of the world you're from. Uh, your boy, as usual, Hunter, community managing over here at Arbitrum. Also have Luke as well with us today, who will be who's doing partnerships as well at Arbitrum. And we're joined, of course, by the wonderful team at nftperp. More specifically, Jose, the founder behind the company account, and McKenna, an advisor to the project as well. How's everything going, guys?
Doing well. Thank you for having us on. We're excited to get to talk about NFT Prep today with the rest of the Arbitrum community, and it's great to have a chat again. I've got in touch with Luke from back in early, like probably April or May, and it's good to speak with you again.
Yeah, I think it was NFT NYC, so perfect event. I'm glad we kicked off our journey then to your beta launch now. Yeah.
Yeah, and quick shout out to McKenna. Agreed to come on last minute to kind of help us during the private beta, and also for the space today. And yeah, excited to get things rolling.
Let's do it. That's new. Thanks go to you guys for coming on. Um, no, I think I'm definitely excited for this one. To me, the most exciting spaces tends to be the ones where we're speaking with protocols that are really kind of on the bleeding edge of DeFi, and even sometimes NFTs. I guess before we even get into NFT prep generally, can you guys maybe give maybe like a background story around kind of how you guys came to founding NFT prep?
Yeah, definitely. And I'll let McKenna give a quick intro of himself after as well. So um, I'm the founder of NFT Perp. I got into crypto around 2017. Before that, I was in private equity. After I got into crypto, I worked for a boutique venture firm based in Asia for about almost 2 years. That fund eventually transitioned towards high frequency trading. I did about 2-3 years in product management in Web2 space, helped a ton of different e-com SaaS companies optimize for better revenue, higher conversion rates. So I'm naturally a product guy, but has finance background. And um, the summer of 2020 came about, and fell in love with DeFi. Fucked around with a lot of different stuff in the space, and eventually met my co-founder towards end of last year, and we kind of had this strong conviction towards building an NFT, related protocol. And that backstory is I joined an NFT investment DAO that's based in Hong Kong and Taiwan, and mostly Asians. And a lot of our focus was on blue chip NFTs. So we pull money together, pull in NFTs, and expect for airdrops and all different strategies. We sweep the floors and whatnot, and quickly realized that there's no hedging solutions for NFTs out there as a collector. So if you have gotten your airdrop during the ApeCoin launch, you would have gotten insane amount of return. But at the meantime, unless you sold your NFT at the top around 150 ETH, you're essentially unprotected on the downside swing of prices. So I was like, oh, wait, this is kind of dumb. Like, there's no way to short NFTs as a collector so you can hedge. That kind of set off a journey for myself to work on NFT Perp. My co-founder worked for Citigroup, RBC, Leontech, large hedge funds, investment banks as an exotic options trader. He was managing about $1 billion in notional value on his trades, and we kind of got together and realized that this is a, a low hanging fruit in the market that no one else is really working on, and decided to create NFT Perp with entirely on-chain protocol. So I guess it's a good time to be building DEXs right now. And our focus is a DeFi first protocol and catering towards NFT community participants' needs. And along the way, met really strong supporters along the way, and including McKenna here today. And I'll let McKenna introduce himself.
Yeah, hi. So I'm McKenna. I work for ROK Capital. I'm basically head of research there. Do some stuff on the venture side and also a derivatives trader as well. I got into crypto in like 2017. Basically read the Bitcoin white paper, didn't understand any of it. It really annoyed me. I got really deep into cryptography, distributed systems. And then I actually did my master's dissertation all on Ethereum scalability in 2019. Mainly on state channels, zero knowledge rollups, and a bunch of other stuff as well. I'm kind of like a developer at background, and then also been degen trading along the way. But yeah, I worked really closely with Perpetual Protocol. I was quite early to DeFi. I think I got into DeFi when it was around about 300 million TVL, when it was basically just make a DAO and die. So yeah, I was in DeFi for a while, and I was very bullish on decentralized derivatives post DeFi summer, because the derivatives market eclipses the spot trading market. So yeah, I've worked with Perpetual Protocol very closely since January of 2020, I believe. Yeah, around that time or April. But yeah, I've worked with them for a very long time. Also know the teams at DYDX as well. But yeah, I think there's an obvious use case for NFT perpetuals. I think a lot of the blue chip collections right now price out a lot of traders. Like it has a really high capital requirement. And often people don't want to sell their NFTs as well, like their collectibles first and foremost. But people don't really want to suffer the downside of them. So I think something like nftperp clearly has a product market fit. And the private beta has also gone very well. Like a decent amount of volume is coming in the BAYC market. So it shows, yeah, there's a clear tool for speculation for traders here.
That's awesome. And thanks for sharing your background. It's always good to have more people in from the TradFi space and obviously bring a wealth of knowledge from that. And also the trading expertise for sure. Could you tell us a bit more about what nftperp is and, go through the product in a bit more detail? I feel like you hyped it up a lot, and I bet the users or the listeners here are excited to hear about it more.
Yeah, definitely. So I think before we hop into what nftperp is, it's important to go through the why we're doing nftperp. And initially, when we set out to do nftperp, this was like beginning of this year, January, February. Our initial ethos is that we saw two main problems. Number one is there's no way to short NFTs. So traders, you can't really profit from anywhere else except for buying low and selling high. And most people's cases are buying high and selling low, losing money. So we thought that by creating a tool that allowed people to go short on NFTs, allowed people to have a different market dynamics around how people are profiting and how liquidity could work in the space. That was the initial goal. And then secondary, we thought that blue chip NFTs like Bored Apes and Punks are far too expensive for most of the retail community to get involved. Right, they're at its peak, it was probably around 400K, 500K per piece, and that's quite insane. I don't think most people have 100 ETH, 120 ETH laying in their wallet to punt on NFTs. So that was the initial goal, and with that, we set out to do nftperp. nftperp is essentially a DeFi protocol. It's a perpetual futures exchange. So you can think of stuff like perp.com, the perpetual protocol, GMX, DYDX, Gains Farm, like all these on-chain derivative protocol. Those are mainly serving the fungible tokens, Bitcoin, Ethereum, all that stuff. Our focus is doing that, but for NFTs. And the basic premise is that traders can go long and short on the prices, like floor prices of NFTs, without owning the underlying asset. And what is that helpful for users? Number one, if you don't have enough money, you can go on our protocol and you can long as little as 0.01 ETH. Or short as little as 0.1 ETH and get exposure on price action of these very expensive assets that you otherwise wouldn't be able to get exposure to. But as a collector, it's pretty helpful, right? Because if you have, let's say, you're getting in your BAYC because there's an airdrop and the price is pumping quite a bit, you can take a short, but after buying in, so you may remain a delta neutral position. And what that means is if you take a short at the price of 100, when you enter, the price is 100. If the floor price dropped to 90, your underlying ape value is worth 90, but from your short position, you can gain that 10% profit, 10 ETH profit. So your net portfolio value remains the same, and the other way around as well. So I think for collector, it's like extremely, extremely helpful. And as we built more and more, we found out that hold on, there's a whole lot more to this besides the benefits for traders being able to short, collector being able to short, and allowing retails to get involved on blue chip collections. There's a whole lot more than we initially, set out to do that we didn't know and discovered our way through by networking and talking to potential users and different NFT finance protocols in the space. For example, right now there are a ton of NFT lending and borrowing protocols out there. For example, NFTFi, BendDAO, uh, JPEG, there is Arcade, like all kinds of different NFT lending and borrowing protocols. For lenders, when you're giving out a loan at a loan to value ratio of, let's say, 50%, if the price of NFT drops, the borrowers may not pay back on the loan, and you can get essentially negative equity on debt. And for those lenders, it's good for them to be able to take on a hedging solution as well. Traditionally, people have done it with options. That's like an OTC option. You literally write contracts and is doing it on a trusted basis matter. There's no way to do it on chain except for options protocol like Putty or Hook protocol. So what we've done instead is you can allow people to take on a short position and get exposure instantly without having to find a counterparty. So that's I think one of the things that's really exciting. And then outside of that, we also found that NFT perp can benefit people like they're doing market making on NFTs that perhaps right now they can only offer 10% spreads between bids and asks because the fees are so high and the downside risk is not protected. Now they can use NFT perp to hedge inventory risk as well. So we've gone through a lot. At its core, NFT perp is a perpetual futures exchange that solves a lot of different needs that focus on NFTs itself.
I think it's so cool, by the way, that you know, like you guys have kind of come up with this idea as I think, you know, I guess we refer to it as like kind of like the DeFi Lego stack. Because as you said, like, you know, I've seen lending and borrowing platforms before where, you know, that kind of integrate NFTs as well, but I don't think I've ever seen like a platform where you can leverage um, the you know, different NFT positions, which I think is great.
Yeah. So I would say right now, there is MetaStreet recently pushed out this protocol called Power Sweep, and that's essentially like allowing you to use borrow money basically and purchase NFTs on spot. Like you can sweep with more power, with buying power, and then you essentially don't get the NFT itself. Like you still have to pay back your loan, and when you do, you get to keep the difference of profit. So that's like probably the only NFT leverage trading out there at the moment. But it's only on long, right? Look, our thesis is that the entire NFT market has been operating over the past 2-3 years entirely based on longs, and there's no short open interest at all. And we think that's just crazy. And by introducing the short mechanics into the space, it balanced things out and it allowed people to actually still make money through the bear market by shorting or hedging solutions. So yeah, I think the application here is like quite large.
Yeah, and I think it'd be nice to know as well, like in addition to what you, some of the stuff you mentioned earlier, like what other problems do you think NFT perp solves? I guess within like the crypto and even DeFi or NFT space, frankly.
Yeah, maybe I'll let McKenna take on this one. I've kind of covered a little bit too.
Yeah, I think I said previously. I think the main thing that I'm really excited about is in regards to the blue chip NFTs. There's so much capital in the space that wants to speculate on these assets, but in general they just don't have the capital requirements to meet that. So I think it really unlocks like a huge amount of volume for these projects. But I think people were slightly concerned as well because a lot of these ERC I mean, a lot of these NFT collections who are launching ERC20 tokens, and people were worried in regards to some of the speculation going to the ERC20 because it's more liquid and going away from the floor price. But I don't think many of the NFT traders actually wanted that. So, I mean, Paradigm came up with like a really novel approach to kind of like solving this problem, and they did it with the gobblers. So they basically they tied the NFT collection to hyperinflating ERC20 tokens. So if you buy the ERC20 token, you're going to be losing money over time. But if you hold the NFT, then you're going to like be producing the token. So I thought that was kind of like a reverse from the liquidity in these launched ERC20 tokens back to the NFT floor price. but yeah, I mean, what obviously you can't really get leveraged. I'd love to get leveraged on some collections as well, especially with like some of the announcements. I mean, it's very akin to just like traditional catalyst trading, right? Plenty of these NFT collections are basically launching games and metaverses. Obviously, Bored Ape is doing this. I believe Azuki is doing that as well. And there's a lot of hype around this. I mean, it's going to translate into the floor price, and if you're aware of this information, then you can obviously make good money from that. So yeah, and I think obviously Joseph hit the point home as well in regards to there being basically zero short open interest on the market, which doesn't make any sense at all. But yeah, I mean, obviously, just to, like summarize, like it's to short, it's to reduce the capital requirements of speculation, and it's also to go just like delta neutral as well for traditional collection holders. I think those are the three main points that we like trying to hammer home with this type of product.
Yeah, and I think, to your point, having people being able to get exposure to these blue chip NFTs at a sort of with however much they want is a huge opportunity. I mean, I certainly would take advantage of that more. It always sucked to have to buy a whole thing, and I wasn't going to do that with apes and things like that. So I could see this working well for a variety of folks with that thing.
Absolutely as well. And I think on the derivative side, obviously there's a bunch of protocols that are developing options in regards to NFT floor prices. But the matter of the fact is, basically, Perpetuals are the most simple product in the space that retail traders use, and it's really easy to just take a position that way. But yeah, I think we're basically one of the very first NFT perpetual dexes to the market, and obviously on the largest layer 2 on Ethereum as well, which has incredible network effects. So we're really excited to see some of the growth here, especially as a lot of the liquidity and general use of Ethereum transfer to layer 2s over the next couple of years as well. I think there's really good growth potential.
Yeah, totally. That makes sense. Could you tell us a bit about the competitive landscape and how what both about the competitive landscape for NFT perpetuals and how is NFT perp unique?
Yeah, for sure. I would say confidently that there's probably less than 3 to 4 players that are doing NFT perpetuals and derivatives right now. Actually, no, derivatives. They're a little bit more. Like there's stuff like the people are working on CDS, like credit default swaps, and there are people working on options. And, some of them are cash settled, some of them are physical settled. I would say for perp side of things, projects that have launched and have real money trading right now. One of them is Injective Protocol. Recently, I think they might have rebranded back to Helix. They have an order book model that's on chain for NFT derivatives, and NFT Perp uses a virtual AMM model, which is pioneered by Perpetual Protocol, and later adopted by a bunch of different on-chain derivatives protocols as well, including protocols like Drift, like Hubble Exchange, and several other different AMM models. So we operate with a virtual AMM model that's initially pioneered by Perpetual Protocol with a lot of different modifications and now our own iterations on top of it. Our thesis is that as long as we have cash at an insurance fund that can backstop positions and create dynamic markets, we can list a bunch of different NFTs out there. And it all comes down to how we risk manage. And these are the things that we're pretty excited about. And I would say confidently that our competitive advantage moving forward is going to be around like ease of use and composability between us and other protocols. So we're currently heavily integrating with other derivatives protocols in Stealth and also other lending and borrowing protocols, so that users perhaps can use NFT as collateral when it comes to trade on NFT Perp, as opposed to having to use extra dry powder of ETH. And one of our focus at the moment is to collaborate meaningfully with other communities and NFT finance protocols out there. And yeah, I think that kind of sums it up in terms of our focus, our edge, and our features.
I think it's really important to highlight as well with the virtual AMM model, it actually doesn't require any liquidity providers. Basically, what happens is when traders make a trade, that collateral is locked in a vault, and then basically the collateral amounts are adjusted based on your P&L, right? So your counterparty are actually other traders. And one of the big problems in Perpetual Protocol, or V1, is that the insurance fund, they actually ended up being the counterparty because there's a big skew in the amount of longs versus shorts on the protocol. So there was always like that systemic risk of kind of like the insurance fund blowing up, which it actually did. And that is their main motivation behind their V2 on optimism, which kind of is like built on top of Uniswap V3 concentrated liquidity providing. But yeah, we're very much aware of these risks, and we have maybe I'll let Joseph discuss how we've kind of like addressed that.
Yeah, most definitely. I think our model is different because our liquidity is dynamic. It's not a fixed K value. So over time, like we're able to do convergence events around changing the initialization price of a virtual MM starting price. Typically speaking, like the main problem with insurance fund bleeding out on paying out in funding because of long short skew is because the VMM price has kind of drifted away from the initialization price. And for us, finding out algorithmic way to restart different initiation points allows us to have better long-short skew balances. And then we also have this very interesting funding rate model where we take the long-short skew into account and bake the differences directly in funding pays and received. So there's no additional capital for the protocol at most times to be paying out and cover the losses. So we're mostly focusing on insurance fund health over time, so the protocol is more sustainable long term. The other thing that's interesting as well is we're introducing this insurance pool model where stakers can also stake into insurance fund, therefore increases the systemic and health overall, and allow those stakers to earn fees and revenues, liquidation penalties, and then in return they have to basically be an insurance pool and backstop any sort of bad debt if things happen. So it's like a very indirect way of thinking about how a LP pool can backstop positions. And yeah, so it's kind of like writing a put option in a way we're collecting premium in the case of default. Yeah, so that's kind of the main differences I would say compare us with other on-chain VMM models. All have different slight iterations and modifications, and we're one of the different iterations of it.
Oh, I almost dropped my phone there. That's awesome. I think to switch it up just a little bit, I kind of want to preface this with saying, obviously in crypto, there are many different types of people. You have the traders, you have the collectors, NFT collectors, and I guess even within those two categories, you have a multitude of different people, personalities, I should say. Like who do you guys cater NFT perp for in that case? Because I feel like you're really usually only seeing one or the other. Not I don't think I've really ever seen like kind of like an NFT collector also happen to be, I don't know, like a degen, going long and short on his entire collection. I could be wrong, but I'd love to hear a little bit more on your thought process behind who you guys are marketing the protocol to.
Yeah, that's a good question. I would say a lot of our volume will come from speculations, specifically on retail. But I think I'm also starting to see a shift where there's a fundamental need for these lenders that are lending out capital on lending and borrowing protocols, and also market makers. So I would say like hopefully there's a healthy even split in between the market makers, the funding rate arbitrageurs, the speculators, the collectors. Like NFT perp is at its core, the way we design it is it should be as composable as possible. So it's not specifically for collector, for example, right? Because if you think about how much value is being collected in a single collection across, let's say BAYC, for example, right? You're limiting yourself down to 6,000 people that have Bored Apes. Obviously, with 6,000 people, you can't convert all of them and have them all be your users. That's just simply impossible. If you can convert 5%, you're doing pretty well. So for us, we had to take a step back and look at where the capital flowing into. Is there money on the sideline? And if there are, how can they be unlocked by our features and our ease of access and composability? So mainly speaking, like our focus will be around speculators. That's money on the sideline. And two, focusing on market making and lending and borrowing. So if you're giving out massive loans on NFTFi or BendDAO or Arcade or Pine loans, all kinds of different lending and borrowing protocols, and you have naked downside risks, it would make complete sense for you to be having an open interest directly on our platform. And that could take up 30% of our open interest at any given time. And the rest could be filled up by arbitrageurs and speculators. So I think that's our main focus. And as a collector, if we can convert a decent amount of them to be, taking positions on NFT perp, that would be great. I think that speaks to a certain crowd that understands DeFi and NFT both, which is a smaller crowd. But ultimately, I think around lending and borrowing and speculation is where most of the volume is going to drive from. A perfect example would be if you look back to ApeCoin launch, when they were able to connect with all the centralized exchanges, Huobi, Binance, FTX, like a bunch of them, and launched their ApeCoin at the same time. And I think at the time, BAYC, as its collection market value in terms of total capitalization, was around 4.2 billion. The day one of ApeCoin launch, capitalization went up to fully diluted valuation, went up to from I think 14 at launch and then 17 at peak. It's like 17 billion. So you can kind of tell like how much volume it could generate when the money on the sideline is able to pour into this ecosystem. That's the thing I'm bullish on, and that's the thing I want to convert to allow people to also get into NFTs with ease and use our protocols to easily speculate. So that's my main bull case. I think speculation will kind of drive a lot of the volume, and then two, for lending and borrowing.
Awesome. Yeah, totally. I think those are great use cases, and I'm glad you mentioned them. I guess one of the things I was curious about for you guys is how did you guys choose to launch on Arbitrum, and why?
Yeah, that's a good question. We initially actually started deploying our first MVP. It was on Polygon, and we kind of ran into a bit of issues around Polygon RPC problems, and a lot of our builds were failing. I'm sure they're probably better now over time, but we kind of felt that there's a pretty strong pull towards Arbitrum ecosystem. I think at the time, Uniswap already launched on Arbitrum, and GMX was live, for quite a while. There was a lot of DeFi activities that we think the users understands DeFi quite well and are relatively sophisticated. And I think outside of Ethereum, one of the more vibrant NFT ecosystem was Solana, and also on Arbitrum, like Treasure DAO, the GMX, Blueberry Club. Like all these different NFT activities are actually pushing out quite a bit of volume. So we thought it makes a lot of sense to be on Arbitrum, and we want to stay close to Ethereum ecosystem. So it's obvious to choose in between the layer twos, and we chose Arbitrum because of how the users speculate assets and the user persona and demographic on Arbitrum kind of made the most sense unto us. And outside of that, deploying on Arbitrum, especially post Nitro, compared to other layer twos and layer one on ETH, for example, is just dramatically cheaper on operations and throughput and speed. So with these fundamentals and also just data that are telling us, Arbitrum just make the most sense. And we do like the fact that you guys focus a lot on ecosystem growth and help projects get distribution and work with us on a very open-ended basis. So we do appreciate that as well. And yeah, that's why we love Arbitrum.
Yeah, I think for me, if I could just add to that, is I think EIP 4844 is going to be a very huge EIP to be implemented. I actually think it's the merge trade for layer twos. I don't really think people know how cheap the transactions are going to get. It's by at least an order of magnitude. And yeah, as Joseph was saying, obviously with the Nitro upgrade, Arbitrum was clearly ahead of Optimism, even though Optimism has made some really good progress with their Bedrock architecture and their cold data compression that they will be releasing fairly soon. I just think as well, like with the entire Arbitrum ecosystem, like Joseph was saying again, Treasure DAO for the NFTs and then GMX for actual traders, like combining both the speculators and the collectors as well. That was like a clear value proposition for Arbitrum. But yeah, I think Arbitrum as well, not having any token incentives just yet. I think they have. Arbitrum has a way more huge ecosystem and also network statistics absolutely overshadow Optimism's right now, and Optimism has ecosystem incentives. So I'm very, very excited for Arbitrum to launch their ecosystem incentives and really bootstrap the network even further.
And it's definitely obviously a again, I said on every space. So for those who are here on every space, I apologize. But it truly is like a community effort at the end of the day. I think projects for a while honestly had just gotten used to just choosing a chain because likewise, like maybe there are other projects or friends that they have there, and then just kind of building vertically instead of even like bothering to talk to the team building the chain or anything related to that. There's actually been plenty of times in the past year or so where we'll literally just find out about projects that have already deployed, relatively sizable, and then it's like, wow, they didn't even bother reaching out. Like, we want to help. So I think it's great that again, projects like yourselves that are really kind of on the bleeding edge of DeFi and NFTs are choosing Arbitrum as your home. We really do appreciate it.
Yeah, and we appreciate you guys being so willing to help out and help early stage projects like us to get more exposure and help us connect with different communities. And Luke here has been just a rock star. He's connected with me with a bunch of different. At the time of fundraising, it was pretty tough because Luna just blown up. Everyone's bearish, and Luke is still helping me, connecting me with different funds and potential angels and getting me into parties in New York. He's just a rock star, man.
Dude, I appreciate those kinds of words. Anytime I saw when we met up, you definitely had a strong vision and you were willing to do the dirty work and execute it all. So I'm glad that's been useful. It's been a long way, and I really am in awe of the progress you guys have made.
So off the back of that, I'd love to ask, if possible, if not, it's fine. But do you guys have any planned ecosystem collabs? Like Arbitrum ecosystem collabs in this case?
Like as in like collaborating with other projects on Arbitrum?
Yes, it is a. It's a. What's it called? What do you call that? It's like a thing that every project has to do when they come.
It's
Unofficially.
like a strategic partnerships. So we launched our private beta. A quick stats on our private beta I would like to share with everyone here. We launched our private beta about a week ago on the 25th of November, and we've done just a little bit over 2,176 Ethereum so far. So we're definitely just blown away by the support we've gotten from traders and people that are just testing the protocol are able to put up this decent amount of volume. In dollar terms, that's around 2.7 million in a week of launch. So we're pretty happy with that. The traders we've gotten so far are in collaboration with other protocols, other communities. And one thing I want to highlight is we've been working with the Blueberry Club from GMX, giving them whitelist spots, and they're bringing a good amount of traders from our end. So we're definitely very bullish on protocol collaborations between us and other DeFi protocols. One thing I really see us doing, and this could be done permissionlessly, but obviously it would be good to have other projects to give us sort of a green light and allow us to have users going back and forth. We definitely thought about stuff like using GMX and having delta neutral positions by stacking ETH on nftperp, because at the end of the day, like on nftperp, the basis trading currency is ETH. So our ethos is around stacking ETH. So for traders, if you're maybe overexposed and you want to protect your positions on your ETH value of portfolio, you can use GMX for sort of different hedging solutions, or even other protocols that are launching on Arbitrum. Outside of that, we've spoken with the guys from Camelot DEX, which is like an upcoming AMM as well, and we'll be collaborating with them in the future. So that's sort of our main focus around ecosystem collaboration. And a lot of the protocols that we do want to collaborate with still are on layer one, because of most of the NFTs are on layer one. So eventually we'll move towards sort of bridging solutions that allow different NFT protocols that are focused on DeFi to collaborate with us on layer one, and then bridge assets and messaging via bridges to layer two. So ultimately, like, if we could, we would have been on ETH layer one mainnet, because that's where most of the NFT liquidity are. But it's not feasible to do it, and for us, it just makes a lot more sense to be on Arbitrum, because the performance, the community, it just makes a lot of sense. With that, I will drop an alpha. We are launching an NFT collection with nftperp. It will be a PFP, project for nftperp, and it's going to be a free mint. There's no cost to get involved. And I would imagine there'll be a lot of collaboration between us and other NFT collections within the within the Arbitrum ecosystem as well.
Yes, free NFTs.
Free NFTs. But to get whitelisted, you have to be in our private beta, trading on our private beta. So do join our private beta if you like. So with that, I want to give some quick stats on the private beta. Like I mentioned, we've done just over 2,100 ETH in volume so far. We've had just a little bit over 600 traders at this point. And we are collecting more wireless addresses to come and trade on private beta. We're launching a trading competition starting next week for 2 weeks, and there will be competitions throughout the next 7 to 8 weeks before we go on public mainnet. And the incentives will be around, we do have a retroactive airdrop campaign going on, and the trading competition prizes will be in our nftperp tokens, and we'll get some sponsors on board as well. Like, for example, we've done 2 paper trading competitions before launching on private beta, like Real Money. The paper trading competition was sponsored by multiple different NFT projects, DeFi protocols. So, for example, Milady, they were one of our first sponsors for our first trading competition. FloorDAO was also included in that sponsorship, and there was all these different protocols that are helping us, like Good Minds, for example, and then there's Bastard Fan Punks, and we're going to continue to look out for more sponsorships for our next events, and hope that community members that are trading on nftperp not only get the benefits of like being able to short NFTs and get involved on price action of blue chips, but at the same time get rewarded for ranking high and generating decent volume on the protocol.
Okay, awesome. I feel like that's amazing news. I appreciate the alpha drop. These are great things that I'm looking forward to as well. So I've looked through some of the stuff, and I definitely feel like you have a lot of cool integrations. The Discord one, the DGen score stuff, all cool stuff. Especially being able to chat with people directly in the app just seems like something that's like keeps it social and trading kind of. I do like that.
We have a troll box. It's like dating. If you guys have been around for a bit, like you've traded on BitMax like back in 2014, 2015, or 2016 maybe, you would know what Trollbox is, and it's just amazing. Like, it's just while you're trading, you can chat with others and just talk about anything. We don't have any moderation for Trollboxes as of the moment, so you can swear, you can do whatever you want. It's like just kind of a degen place for people to come together and do whatever they want.
Trollbox was one of my favorite places on BitMax when I just got started out in crypto. So For anyone who didn't experience that, I'm very sorry. They're basically reminding me of like Modern Warfare 2 lobbies. It's just pure chaos. But yeah,
That's a
it's
good
good fun. It's
comparison.
good fun.
Yeah, I missed that, but that is a good comparison. I couldn't imagine how I was a big Call of Duty person growing up, and that was chaotic. So I can imagine. Awesome. So could you tell us a bit? Do you have a timetable for the mainnet launch, and what features will be available? What collections will be available? How are you
Mhm.
handling the launch?
Yeah, definitely. So our plan for mainnet is we have a minimum of 4 weeks on private beta, and we'll likely push out to have a week long period because we launched on the 25th of November, and 4 weeks after is Christmas. So I don't think Christmas is a good time to be launching a protocol. Most people are going to be checked out and spending time with their family. So we'll think about launching when private beta is done, which will likely be 8 weeks long. So end of January, around February is what we're aiming for public mainnet. But in the meantime, we're already accepting more and more whitelist spots for people to trade on private beta and get as much users and volume as possible before we fully go live. So these are the I guess the key dates and time we're aiming for.
That's awesome. And I think to kind of maybe round it out a little bit before we end end up going to the community for Q&A and stuff. I kind of wanted to ask a little bit and maybe dive a little bit into kind of the degen nature that NFT perp kind of creates. And what I really mean by that is, for those of you who haven't already, if you go to like the paper trading section of the NFT perp site, and you really look around and kind of like look at the visuals that they have on there, and like little pepes and stuff around there, and obviously the troll boxes you mentioned earlier. You'll really truly notice how this really meshes well, I think, with crypto culture. So I'd love to hear more about how important that was to you when you were creating this product. Kind of tying that culture in while also just making this bleeding edge product.
Yeah, definitely. So look, like the way I see it is as a project, as a team, as a founder, don't take yourself too seriously. At the end of the day, like this is meant to be fun. And I personally think like my observation in crypto over the last I've been in crypto for 5 years, I guess, and my observation is the the early community that got into Bitcoin and Ethereum had their own personality and the type of people that crypto really brought in and drawn in people. I think, but dating back to 2008, 2009, when the financial crisis happened, and Satoshi created Bitcoin to kind of counter this, um, you know, fuckery of governments with centralized power and printing of money and bailing banks out, and I think that was his cry out to say, I'm done with centralization. Let's do something decentralized and have monetary policies, and that could be controlled by anyone. And that spoke to a certain crowd. And those were likely like the libertarians, like they understand the power of decentralization, and they probably have come from the cyberpunk movement back in the 80s, and understand the power of perhaps privacy and decentralization. And with Ethereum, that brought in the application level. The ICO stage brought in the finance bros, like the venture capitalists, the ICOs, the 50x and 100x gains. With DeFi, it brought in the on-chain application, the trustlessness that brought into another set of people that understands the power of finance, and thought that maybe crypto was dumb, but saw DeFi and got convinced and came in. The NFT brought in the pop culture, also like a good amount of degens in finance as well. So I think protocols that are making these observations need to speak to ideally all of them, right? So us being in a DEX, we're focused on decentralization, the idea of trustlessness finance. Um, Having speculation brings in the finance type of guys that understands profit making strategies. Having obviously being a DEX, bringing in DeFi people as well, and now NFTs, like we're merging that pop culture, we're merging that online degenness, whatever you want to call it, into our space. And we're running our DeFi protocol like we're running an NFT project, like, and also treating an NFT project like, more substance that has utility around what we're doing with NFTs and how we think about tokenomics and design. And a part of that is understanding what people like and what I like, and our designs speak to that. We're not taking ourselves too seriously again, and just want to make sure at the end of the day, like, you're here to have fun, you're here to express however you want, and that's what NFT it's all about. So we're not shy to put out memes, to troll people on our Discord, to put out poop emojis, like, at the end of the day, like, that's what we're all about. And also just to give you an example, our NFT collection that we're launching, which will happen, I guess, like maybe around January or February. The theme is 5 different types of. It's like a PFP, and it's a nut. It's like either a peanut, or it's an almond, or it's a walnut, an acorn, or a cashew. And they're called mafia nuts. And these mafia nuts essentially, like, work in a crime family. They have to work their way up by ranking up higher in the family by trading more on NFT perp. So the more you trade on NFT perp, the more volume you generate, the higher rarity you get, and your physical NFT appearance also change. And yeah, like, the whole point is just like merging this NFT and DeFi, ideal together, and allow culture and community to grow and thrive underneath that.
Yeah, absolutely. And yeah, just to add to that as well, like the amount of comments I've got from people in regards to the UI is there's quite a lot, and everyone's sentiment is very positive. And for me, like, to be honest, I knew about NFTs early, but like DeFi really spoke to my heart. I didn't really understand the entire NFT community at first. But to be honest, most of my NFT trades back in the day, I lost money. I think one of my best traders, like Crypto Dick Butts, right? Yeah, unfortunately, I wasn't the best NFT trader, but I've got better at it right now. But yeah, like, you jump onto something like these NFT spaces, and it's they just shitpost like so much. They just shit talk each other. It's really funny. I actually laugh most of those spaces than like any other ecosystem in the space. I actually find it really funny. So yeah, I find like the UI is like very appealing to like the NFT crowd, and I think the troll box really adds to it as well. So yeah, I think it's a very friendly and intuitive UI.
Did you remember hearing the Goblins space, the Goblin Town space? That was like,
yeah, I remember.
Yeah, I mean, like, I think okay, look, like, I think NFT space, like, okay, Twitter in general, or just like fucking the entire society in general, it's an attention economy. Like, whatever you can do to get attention, you win in the space, right? Especially for NFTs, like, it's either like something super new, or bizarre, just weird as fuck, that gets attention, and I think like people like that. And our thinking is just like, be fun, be new, and be weird, and it's not to get attention, but at the same time, it's just like allowing us to express ourselves, and people like that. Great, they can be a part of it, and if you don't, like, that's okay. Like, we're not for everyone. Like, at the end of the day, like, my ethos is NFT perp should speak to a certain people. It can be used from anybody, but you don't have to like our culture if you don't want to. And it's completely fine. Like, that's kind of our ethos. And if it speaks to you, great. Be a part of us, and be open minded. If not, that's okay as well. You can use our SDK, create our own front end, and create and trade off from there.
Yeah, I love it. I mean, definitely, I feel like nurturing a community and the memes, and actually love the NFT like evolution, or which degenerative NFTs or whatever you call it, where like you can evolve and become more degen. I could imagine like just become like, yeah, a more broken down human as you train and spend 24 hours, watching charts and keeping up with stuff.
Yeah, and around like, okay, so for example, like, we have trading competition, and our current plan is to obviously rewards the top PNL, the top ROI percentage. We're rewarding the top liquidated accounts. So if you lose a ton of money, we'll also reward you too. So.
I love
jeez.
it. Yeah, that's truly degen. Oh, amazing. I guess I was gonna, this is my next question, but I think we hit on a lot of it. But if there's anything you think I missed, people please feel to add. I was just gonna ask how can the Arbitrum community get involved with nftperp, both from a community standpoint and also from, I guess, the product.
Yeah, absolutely. So we currently have two deployments available on Arbitrum One. They're both on mainnet. One is paper trading. The other one is private beta. Paper trading, it means just it's fake money. You can come to the protocol, uh, get it from the faucet. You can get a mock wrap Ethereum with deployed. You can trade without any risks. Play around the protocol, see if you like it. If you do, if you you're confident with trading with real money, you can apply for our private beta. You can find that application link on our homepage. That's nftperp.xyz. You can also come to our Discord and find the application link in our private beta in our official links. Wait for a couple of days for us to manually approve you, because we do go through. I personally spend nearly an hour and a half a day go through all the applications and read about what, because I asked them to introduce themselves and give us a little background and why you want to trade on nftperp. And we actually manually approve these applications. And once you're approved, you can join our trading competition that we're launching next week. And wait for our NFT collection that we're giving out for free. Those are free mints. But at the same time, we are pretty active in the space. If you follow our nftperp account, we try to do once a week a Twitter space with other NFT finance protocols. We have a podcast called Look at My JPEG. We've been doing that for 13, 12 episodes now. And this is one of the ways to keep in touch, get involved, follow us on Twitter, and join our private beta and start trading.
Yeah, I didn't realize you had a podcast going. That's pretty cool too. I'll have to check it out. I love the title. Look at my JPEG. Let's go.
Get us on something.
Yeah, we'd love to, definitely.
But I think just to be a little cognizant of time here, for those who have questions in the chat, feel free to raise your hand and we'll pull you up. And if not, we can always just move forward. But let's give people a chance just in case. Or actually, while we're waiting for someone, I actually did have a question, and it's possible that maybe you answered it already, but for I guess once trading goes live, or maybe even beyond that, are collections automatically kind of able to be kind of traded against, or does there need to be some sort of criteria they have to fulfill to actually be listed on there? And can it be on any, or does that have to be on Arbitrum?
Yeah, good question. So our current NFTs that we're trading are Punks and Bored Apes, and both of those are on Ethereum Layer 1. So the initial process for us to list a market pair, the team essentially make heuristic decisions on what to list based on market value, volume that it's generated on spot over time, and also if it's a blue chip collection or not, right? So we'll try to focus on the blue chips because that's where most of the volume come from. After we launch a token, the community will be able to decide what market pair they should be listed on nftperp, and this will have some initial criteria for it to be listed. It needs to be a decent volume, liquidity on spot for us to say this is a viable market pair to be listed on nftperp. At the end of the day, we need to treat each market pair as sort of like a protocol's product to its users, right? If it generates volume, it means it generates revenue. It has volatility, it means it'll generate volume for us, and therefore bring back revenue for the protocol. If it doesn't, we'll think about delisting, and because it's not beneficial to have a liability when you list a market pair when it's not generating revenue for the protocol. So it's initially team decision, but long term, decentralized, allow the token holders to vote.
Great to hear, and frankly, I should have asked that earlier, but I think that's I don't know. I think it'll be really cool to see the different collections that you guys end up, or I guess the community also ends up kind of choosing to be on there. But what do you think the effect of that on a collection could be? I'm not sure if I'm just kind of going down a rabbit hole here, but Like, I'm just wondering, maybe like, like if it's kind of just like a net positive thing for the collection, for the for the collection makers themselves as well, alongside the traders who are trading it.
Yeah. So one of the guys, one of the founder, I think no, the founder from Wizards Room Cult has reached out to me on Twitter, just kind of like tagging us, and we started a conversation on Twitter about it. So his idea is that, like, it's not, he doesn't have a specific opinion towards it. It's just his observation that if a certain collection has generated decent volume on derivatives, the fees and royalties on spot will therefore kind of go not away, but it will essentially subtract some of volume from that, and therefore, collectors should no creators should think about how to collaborate with derivatives protocols. And my take on it was that, with regards to royalty, right? Like, if volume on spot goes down, it naturally means the royalties going back to creator goes down. So, in theory, it's not good for the creators. But at the meantime, like, the way I see it is, think about DYDX perps or GMX. All the assets that are being traded on those market pairs, like Bitcoin, Ethereum, AVAX, all that stuff. When those per trade, when those volume happen, none of the network gas consumption happens on those underlying chains, right? When you trade for perps on Bitcoin, there's no transactions actually happening on Bitcoin. Therefore, no fee going to the miner. For trading Ethereum pair as well, when you have $1,000 worth of trade, no actual Ethereum is being transacted on the underlying. So therefore, no fee go to the stakers that are staking on ETH2. I see similar analogy when it comes to NFT trading. If there's no underlying NFT being traded, there's no transaction volume on spot, so therefore there's no royalty going back to the creators, and there's no actual art being changed hands. So that's the way I see it. But that being said, it seems like for the creators, they're missing out on volume. So what we are open to do is essentially allowing us to have collaboration between creators and ourselves, and say we can give you a referral link if you're speculators that are wanting to trade and not just owning assets, perhaps get into price action. You can use this referral link, refer your traders, your community members to trade on nftperp, and we can do a rev share. So you can also tap into the volume and fee being generated on nftperp. Outside of that, I think a very tangible indirect impact that it could have on the spot market is around the idea of NFT market making. So right now, a lot of the NFT market makers are using their prop capital. So their goal is to make profit with their prop capital, providing liquidity or doing bids and asks hunting on a specific collection. So they could do a bid and ask with a decent 15% spread or 20% spread and capture the volume in between. Now, if they can load on inventory for a specific NFT collection and provide the lowest ask and highest bid spread, they can capture a good amount of entry points for those that are trading floor and exit points. And it's a good business if you're capturing good spread with minimum fee paid. However, if you're not able to hedge your inventory risks using derivatives or other protocols, your spread will naturally be quite wide. And if you have a wide spread as a market maker, unless you're the only one that's closing the gap, your profit is quite limited. And if you're able to use inventory risk hedging like our protocol, you can essentially deepen the spot liquidity by closing the spread quite a bit. So for collectors, for traders that are trading on spot, for creators, you actually see the spot liquidity become thicker and thicker over time by us introducing perps of your collection. So there's a fundamental shift that I'm seeing that will happen over the time of derivatives being introduced in the NFT space on spot liquidity and how the dynamic play out. So we're pretty bullish on what it means for creators if they're willing to collaborate with nftperp, and market makers are willing to use us.
Something else I'd like to add as well, really quickly, just from like a trader's perspective. Like the fees on OpenSea right now are 2.5% for spot trading, and on nftperp they are 0.3%. Traditional derivative dexes, they charge around 0.1% for trading fees. So it basically just means in order for NFT perp to earn the same revenue as a derivative dex, they would need to pull in 1/3 of the volume. So that's like one of the really powerful things. And I mean, if you're a trader as well, you're taking the 2.5% fee plus the royalty fee, and then like it was a negative P&L trade for an NFT, and then you're selling again with the fees and the royalties. All of that like really adds up. So this is kind of like a much more capital efficient way of speculating on NFTs, in my opinion. And obviously, we're going to try and keep the funding rates as checked as much as possible, so it doesn't eat into users' positions. But yeah, I think the fees on spot trading are quite exorbitant. So I view derivatives sort of floor prices being a lot more capital efficient for traders.
Awesome. Yeah, no, I appreciate that clarity there. But yeah, no, I think that being said, again, just to be cognizant of time, we can probably end here. For those who do, just in case that have any lingering questions or again want to join the community, can you just kind of reiterate what they can do just to get in touch?
Yeah, absolutely. Follow us on Twitter. It's at nftperp. You can also join our Discord, apply for private beta. We have a private beta application link directly on our website. That's nftperp.xyz. Yeah, and we look forward to having you guys join our community and trade and have fun and get all the free mints later on.
Awesome. Well, again, really appreciate you guys for coming on today. We look forward to degenning on your platform.
Thank you guys. Appreciate you guys having us on.
Yeah, thank you very much. Appreciate it.
Have a good day.
It is our pleasure. See you guys.
See ya.
Yeah,